Okay. And now is the event you've all been waiting for desperately, I'm sure. I'm going to talk to you about drains. When I went to put this presentation together, I did not find that we'd ever done a presentation on this. I could only find one bulletin article on it, and I know that our manual needs to be updated, and I will be working on that. So for those of counties that do not have a lot to do with drains, this may not be real interesting for you, but those that you do, this is important information. So I'm going to go through it as much as I can in an hour. There is a lot of information there. And as I've always said, if you have questions about it, after through this or later on, you can always call me, email me, and we'll work through it. So we are going to start with drains. So in 1965, all the previous laws regarding the construction, reconstructions, and maintenance of drains in Indiana were repealed, and Indiana Code 36-9-27 was enacted to place the jurisdiction for the construction, reconstruction, and maintenance over regulated drains under the authority of the County Drainage Board. And I pulled from an official opinion of the Attorney General. The purpose of the code was to establish an orderly and systematic procedure for providing adequate drainage in the state of Indiana. So why do we care? Other than you're required by statute, and there are 79 pages in this statute, why do we really care? I do remember auditing once for a town, so kind of a similar situation, where the utility clerk received a call from a new citizen, and they had gotten a wastewater bill, and they said, "What is this?" And she explained it to them, and they said, "I don't think I want that. Just take me off the list." And, she doesn't even know what to say. And I'm sure that you've gotten similar calls if you have drains. Why am I paying this drainage assessment? What is it to me? And there are direct benefits that citizens receive from drainage, but I think it goes beyond, because it is a protection for your county, for your community as a whole. And just like fire or police protection, that's one of the reasons we form government is that for that type of protection. Basically, what drainage comes down to is a management of your watershed. A watershed is an area of land where all of the water that is under it or drains off of it goes into the same place. I'm not an engineer, but I assume that all land, except maybe swampland or some wetlands, will drain eventually. But unfortunately, they don't happen as quickly as is needed, and we have flooded fields, standing water in fields. Or they may not happen as a controlled manner. You end up with flash floods, closed roads, damaged property. And so what we do to address that is drainage. I mean, it's not perfect, but that's the system we use to try to mitigate these kinds of damages to fields and to property. There's a whole system that we use. There's regulated drains, there's dams, there's levees, retention ponds. But what we're focusing on is really the regulated drains today. Only regulated drains fall under the Drainage Board authority. So if you have a private drain where someone has built a drain on their own property, or a mutual private drain where two or more people have gotten together and built it privately, those do not fall under the drainage law, but only the regulated drains do. However, there is a provision for converting a private drain to regulated, so you kind of have to keep those in mind. So a regulated drain can be an open ditch, it can be a tile drain, it can be a combination of both, it can be a single drain, it can be a combination of drains that drain a particular area. And within the definition of regulated drains, there are two types that you do need to remember, rural and urban drains. A rural drain is used to protect rural land, primarily used in agriculture, usually requires less drainage, where an urban drain serves an urban area that needs more protection, as urban areas are more densely populated and have more impervious surfaces, making the drainage more difficult. Indiana Code 36-927-67 establishes the designation of urban drains, and we will be coming back to this distinction and why we need to know the difference between the two. So to outline what we're going to discuss today, we'll be going over the responsibilities for the Drainage Board, the County Surveyor, Commissioners, and Council in part. We will also go over the responsibilities of the Auditor and Treasurer and the drain ledgers in a little more detail. We will discuss the funds established to account for drains, and finally we'll discuss the forms prescribed to support the accounting for drains and procedures associated with those forms. Now, the prescribed forms in the drainage manual offer a manual system, and I know a lot of you have already gone to some sort of electronic or software system to deal with this. But if you understand how the manual system is supposed to work, it'll help you understand whether your automated system is providing that same information. Okay, people. We'll start out with that. It was a little hard to organize this because they all kind of cross at different areas. As I stated, the people that are involved in the process of regulated drains include the county commissioners, the county council, the drainage board, the county surveyor, the county auditor, the county treasurer, and one other group are your landowners within your county. The county drainage board is established in each county to be the executive authority over the drains. The drainage board consists of 3 to 5 persons. The county commissioners can serve as the county drainage board if they choose. If they do that, they have to keep in mind when they are meeting as the commissioners, they are meeting as the commissioners. When they're meeting as the drainage board, they are meeting as the drainage board. So they're 2 separate authorities. So they do have to keep that straight, but they can be the drainage board. They can appoint members of the board, but one member has to be a member of the executive. The other appointed members must be resident freeholders or landholders who are knowledgeable about drainage matters. In a county where there's a single county executive, that executive must serve on the county drainage board. The board does have the authority to sue to enforce any provisions of Indiana Code 36927. The county surveyor serves as an ex officio, non-voting member of the board. The board must organize in January, and they do elect officers. The drainage board may employ and fix the compensation of a county attorney. The county drainage board is entitled to mileage equal to the state employee rate. They can receive a per diem established by the county council as a member of the executive or as a landholder board member. It is the responsibility of the drainage board, based on the assistance of the county surveyor, to have a complete inventory of all regulated drains in the county. The county drainage board is charged with the task of making the determination that maintenance of and/or reconstruction of a drain is needed. They are to weigh the cost of the projects, the potential damages to any property against the benefits of the increased or more efficient drainage. The county drainage board is responsible to approve or modify the classification of drains that are provided by the county surveyor. They are also responsible for preparing the schedule of assessments, for holding public hearings on maintenance and reconstruction projects, and for notifying affected landowners what the total cost of the project and the individual assessments for each property will be. During the public hearings, the board will listen to objections filed by any of the affected landowners and weigh those objections when making their determinations. There is a provision for a judicial review process if landowners are not satisfied with the board decisions. There is a significant portion of the Indiana Code 36-9-27 devoted to how the drainage board is to accomplish these requirements when dealing with maintenance of drains or the construction and reconstruction of drains, including that process for judicial review. We will not be going over all of the details outlined in the statute for these projects. Did I mention there were 79 pages in this? In addition, there are provisions that you will find in the statute for joint boards for drains in 2 or more counties, drains in a municipality or sanitary district, a conservancy district, or a flood control project, and drainage maintenance districts themselves. And we're not going over this morning, but you just need to be aware that there is statute on that. What we will discuss is at the end of this determination process, and when the board decides to pursue a project, they should have determined the final cost of the project, and they should have compiled a schedule of assessments allocating that cost of the project to the respective landowners whose land benefits from that drain. The board then certifies that schedule of assessments to the auditor and will let the auditor know if that construction or reconstruction project is an urban or a rural drain, because it does affect how the assessments are collected. I have received questions in the past year where a project was completed, paid for, several years later, the auditor had never received any schedule for assessments and nothing had been collected. What could they do now? And unfortunately, the statute does not address this, and once you're outside of the statute, you're really going to have to work with your county attorney to see if anything can be collected on this at this point, because that's just not part of those procedures. Similar to the construction and reconstruction projects, for maintenance, the Drainage Board will determine the total periodic cost for maintaining a drain, complete a schedule, allocating the cost of the annual maintenance over the property owners whose property is benefited by the drain. This list will also be certified to the auditor. The Drainage Board may increase or decrease an annual assessment for periodic maintenance, and they can also admit an annual assessment for periodic maintenance if the maintenance fund is sufficiently funded. In Indiana Code 36-9-27-43, if the unencumbered balance is greater than 4 times the estimated cost of the periodic maintenance, the annual assessment may be omitted. That is a Drainage Board decision. We'll be discussing subledgers for individual drains, but it's important, I think, to note that to make a determination of whether to change the assessment or admit it, the board has to know what their balance is in that drain, and that's where the auditors come in, and those subledgers are very important. The Drainage Board does have the authority to issue bonds for the construction or reconstruction of a drain. In Indiana Code 36-9-27-94, whenever the board determines by resolution that the cost of constructing or reconstructing a drain is in excess of that amount that the owners of the land to be assessed may conveniently pay in installments over a 5-year period, the board shall authorize the sale of bonds to finance the construction or reconstruction. The bonds issued to finance that project are not the general obligation of the county, board, or any person. The bonds are a lien upon the land assessed for benefits for that construction reconstruction project in a ratio that the assessments are allocated. Okay, the surveyor is the technical expert for the board, for the Drainage Board, and provides the ongoing evaluations on all regulated drains, determines which drains need maintenance or reconstruction. It is also possible for a new drain to be constructed and become a regulated drain of the county, and that's usually based on a petition of a landowner. For those reasons, the surveyor needs to be licensed as a surveyor or an engineer, or employ a licensed surveyor or engineer to have the necessary technical knowledge needed. The surveyor will compile a report on all the regulated drains, and then submit that report to the Drainage Board, and the Drainage Board then can accept or modify that report. The surveyor also makes public the standards that will apply to all regulated drains. The surveyor will also supervise the construction, reconstructions, and maintenance work performed, and will keep a catalog and report of all surveying notes, plans, profiles, specifications for regulated drains. If the surveyor is not registered under Indiana Code 25-21 or Indiana Code 25-31, the surveyor shall employ and fix the compensation of a person who is a professional engineer or professional surveyor. If, for any reason, there is no elected surveyor, the board shall employ and fix the compensation of a part-time or full-time engineer or surveyor. So drains need to be classified either as drains in need of reconstruction, in need of maintenance, or that need to be vacated. A regulated drain is in need of reconstruction when it will no longer perform and function for which it was designed and constructed, and no longer conforms to the maps, profiles, and plans prepared when it was established, or changes to the drain have been made that make the drain inadequate and without extensive repairs. A regulated drain is in need of maintenance when it can be made to perform the function for which it was designed by cleaning it, spraying it, and removing obstructions from it or making other minor repairs. Finally, a drain should be vacated when it no longer performs the functions for which it was designed, or it has become inadequate to properly drain all of the affected land, and the cost to reconstruct it outweighs any benefits for the reconstruction, and the vacation is not detrimental to the public welfare. Once the classifications have been approved or modified by the board, the county surveyor will prepare a long-range plan for the reconstruction or regulated drains classified as needing reconstruction. an annual maintenance assessment for drains classified as needing annual maintenance, and the plan to vacate drains so classified. The plan is subject to approval by the Drainage Board. The county surveyor is also charged with advising the board whenever there is an excess fund balance in a maintenance fund for any regulated drains. Now, together, the county auditor and the treasurer will work together to bill and collect drainage assessments for maintenance or for the construction and reconstruction of drains, in a similar manner to how you bill and collect for property taxes. To account for the drainage funds, the auditor needs to establish control ledgers and subledgers for the drain maintenance funds and the general drain improvement fund. The control ledger will mirror what the county funds ledger for both the general drain improvement and the drain maintenance fund, but it is recommended that you keep a control ledger with your subledgers. The subledgers will be established for each drain that has an annual assessment for a reconstruction project or an annual assessment for a maintenance project. If a drain has both a reconstruction project and an annual maintenance assessment, then you should have a separate subledger for that drain for each type of project. So the auditor receives the certified assessments for reconstruction and construction and the assessments for maintenance from the Drainage Board. They use those lists to extend the assessments upon the ditch duplicate for either maintenance or construction and reconstruction. The auditor will provide the ditch duplicates to the treasurer. It is noted that the assessment is not the personal obligation of the landowner, and only the land affected by the drainage assessment may be sold if the assessment is not paid. The drainage boards will approve all of their own drainage claims, but then they will file those claims with the auditor's office for the usual processing of claims, including the allowance by the Board of Commissioners. The auditor will also need to establish the bond redemption fund and cumulative drain fund if those are established. The auditor will track all loans advanced from the general drain improvement to a specific drain fund and make the repayment to the general improvement fund from the assessments collected for that drain. Okay, for the treasurer will notify the owners of the land affected by the assessment for reconstruction or construction what their total individual assessment is, notify them that the assessment can be paid in full in the first year, or it can be deferred. It is the landowner's decision whether or not to defer the payment. If they defer the payment past the first year, there is a 10% interest collected on the unpaid balance each year that it is deferred. They are required for a rural drain that each equal payment must be at least $50 a year. And again, it has to be done in the 5 years. If they have an urban drain, if it's been classified as an urban drain, then the landowner has 10 years to repay that, and the equal payments must be a minimum of $100 per year. So that's why it's important to know the difference between what's classified, whether it's urban or rural. So the treasurer does collect all the payments for assessments. They note the payment on the tax duplicate. They will prepare a register of ditch assessments collected, and the treasurer also has the authority to invest the drainage funds. There are some special items to note on the collection of assessments. The statute reads that for the purposes of collection of any assessment, the assessments are considered taxes within the meaning of Indiana Code 6-1.1 and may be collected in accordance with the property tax collection provisions of the statute, with a few exceptions. As I just pointed out, the first of those exceptions is that the assessment is not the personal obligation of the owner of the land affected, and only the land affected by the unpaid assessment could be sold. The second is that an annual assessment of $25 or less must be paid in the first installment when the property taxes are first due, or when the next time the installment of property taxes are due after the certified assessment has been received. The third exception is that if there is an assessment of less than $5, that has to be increased to $5. The additional amount is considered a low assessment processing charge, but that charge stays with the drainage collections. It is part of that, goes into the drainage funds. Again, as we noted, rural drain assessments for reconstruction must be paid within 5 years with a minimum payment of $50 each year, while urban drains must be paid within 10 years with a minimum of $100 per year. Finally, there are exemptions from property tax that do not apply to drainage assessments, namely under Indiana Code 6-1.1-10-2 for state property, 6-1.1-10-4 for the property of a political subdivision, and 6-1.1-10-5 for municipal property. These are not exempt from drainage assessments. And municipal property is any property owned by a municipality, such as a park, golf course, playground, swimming pool, hospital, waterworks, electrical utility, gas or heating plant, sewage treatment plant, cemetery, auditorium, or gym. All of those are not exempt from the drainage assessments. Yes.
If there's a $10,000 assessment and there's state property, political subdivision, municipality that they're improving that are exempt, does the 3 other homeowners pay the $10,000?
They're not exempt. State is not exempt. Political subdivisions are not exempt.
So they will pay their...
They have to pay their part, yes. They are not exempt. The commissioners, and we've kind of discussed most of theirs, they establish and appoint the drainage board. They can actually be the drainage board. They will approve claims for the drainage board, and the cumulative drain fund may only be established upon recommendation of the commissioners. The council has the authority to let me go back to this. The council appropriates money in the general fund budget for the drainage board expenses and for the transfer to general drain improvement fund if there is such. The council can establish a tax levy for the general drain improvement fund and or the cumulative drain fund. The council must appropriate funds for every fund that receives a tax levy. The council must approve or obtain a loan for construction or reconstruction projects that are not funded by bonds. Indiana Code 36-9-27-97.5 states that whenever the drainage board determines that the cost of constructing or reconstructing a drain could be conveniently paid within the 5 years by the landowners, the board may ask the council to obtain a loan to finance the project. So the funds involved with drainage include the county general fund, the general drain improvement fund or GDI, the drain maintenance fund, can have a cumulative drain fund, a drain bond redemption fund may also be applicable if there are bonds issued. The chart of accounts also includes a construction reconstruction fund that can be used to track individual construction reconstruction projects that would otherwise be tracked in the general drain improvement fund. It's not required by statute. The statute says you track those in the general drain improvement, but it does give you a mechanism to pull those out, the assessments and the work associated with those construction reconstruction projects into a separate fund and track them. If you have a lot of those kind of projects, you might want to do that. So, and as I said earlier, it is very important that we track the overall balance and the transactions for the general drain improvement, the construction reconstruction fund if you're using it, and the drain maintenance fund. Not only the totals in those funds, but those subledgers need to be tracked accurately so that each individual drain is accounted for properly. For the general fund, the drainage board is basically a department of the county, so the county council should include the drainage board in the general fund budget. The operating expenses of the drainage board are to be paid from the county's general fund. Excuse me. Those operating expenses include such items as the per diem for the board members, compensation of an attorney employed by the drainage board, compensation of an engineer or surveyor, compensation of a secretary or clerk, mileage of the drainage board, engineer or surveyor duties while engaged in drainage work, postage, advertising, cost of notices given by the drainage board in projects involving construction or maintenance, their office telephone, the official records, the office supplies, the office equipment. If a deputy surveyor or engineer is appointed to a specific drain project, the compensation would be assessed against that drainage fund and not the general fund. And if a construction or reconstruction project is approved, the postage and advertising may be charged back to that drain's particular fund after the assessments are collected. The General Drain Improvement Fund is used to track the revenue and disbursements that are not necessarily specific to a particular drain, as well as the construction and reconstruction costs of a particular drain if you haven't pulled those out into the Construction Reconstruction Fund. The General Drain Improvement is found in Indiana Code 36-9-27-73. It is used to pay for the construction or reconstruction of a regulated drain and for removing any obstructions from that drain. And disbursements from the GDI would also include any maintenance costs for any drain that does not have a drain maintenance fund, as long as the cost does not exceed $1,500 or the total annual cost for those types of maintenance projects do not exceed $10 per mile of the regulated drain in the county. You can also use the General Drain Improvement Fund to advance costs for the maintenance funds when the maintenance fund does not have a sufficient balance or the assessments have not been collected to pay for the periodic maintenance. But there needs to be a process in place to make sure that the maintenance fund, the assessments for the maintenance fund are collected and that those drains that receive advances from the GDI are repaid from those assessments once they're collected. Okay. I did have a question of this, and it's going to be, other than reimbursable grants, no fund should have a negative balance, so you should not be running any of your subledgers in negative. You need, that's part of the control over that, so that you use the General Drain Improvement Fund or some other financing to pay those initial costs and then pay that back once the assessments are collected. Sources of funds that come into the General Drain Improvement Fund include the appropriations made from the general fund if they've been made, taxes levied by the council for drainage projects. In addition, statute states that the construction, reconstruction, financing, and project costs are to be part of the General Drain Improvement Fund, which would include the proceeds from bonds issued or proceeds from loans obtained. Any costs collected from petitioners in a drainage proceeding would also be deposited into the General Drain Improvement Fund. Now, assessments collected for construction and reconstruction projects would be posted to the GDI fund with the exception of assessments to pay for bonds, because the assessments that you collect for pay for bonds must go into the bond redemption fund. Interest and penalties for assessments of construction, reconstruction, as well as the interest collected on the deferred payment, the 10%, for construction, reconstruction projects would also be deposited to the General Drain Improvement Fund. Money repaid from a maintenance fund to reimburse the General Drain Improvement Fund would also come back into the General Drain Improvement Fund. Any donations received for the construction or reconstruction of a drain would be deposited to the General Drain Improvement for that particular drain, and the amount donated must be used to reduce the total cost of the project assessed to the affected landowners. In 36-9-27-73E, whenever the board finds that the amount of money in the General Drain Improvement Fund exceeds the amount necessary to meet the expenses likely to be paid from the fund, and the money in the fund was raised by taxation, the board shall issue an order specifying the excess amount and directing that it shall be transferred to the general fund of the county. I don't know how often that happens, but that's only for the, not assessments, that's for the money raised by taxation. Okay, The Drain Maintenance Fund is authorized under Indiana Code 36-9-27-44. The Drain Maintenance Fund is used to track the receipts and disbursements for specific drains for which periodic maintenance assessments have been determined. Disbursements from the Drain Maintenance Fund are for the necessary or proper repair, maintenance, or study, evaluation of a drain or combination of drains. The Maintenance Fund would be required to repay the General Drain Improvement Fund for any funds advanced when the Maintenance Fund balance was insufficient or assessments had not been collected. If the Drainage Board determines that a Maintenance Fund has a balance in excess the amount reasonably needed in that fund for maintenance work in the foreseeable future, the Board may transfer up to a maximum of 75% of the balance to a reconstruction fund in the same watershed. And again, I don't know how often that happens, but that is a Drainage Board decision. The money that comes into the Drain Maintenance Fund comes from annual assessments paid by landowners benefiting from the particular drain, penalties received on delinquent payment of the annual assessments, and any money received from any person in compensation for damages suffered by a drain. So if a drain needs maintenance because the action of someone else has caused that drain to have problems, they can assess that particular person with the costs for repairing that drain, and those will come back into the maintenance fund to repay the maintenance cost for actually fixing what was wrong. That's a very convoluted way to say it, but I think the first Drainage Board minutes I ever read, there was a situation where a taxpayer wanted trees removed at the edge of their property, and they asked the Drainage Board to do so. And the Drainage Board said, they are not impeding the drain in any way, we will not. So the landowner got a bulldozer, pushed the trees into the ditch, and then said, now are they in the way? So they were removed, and the Drainage Maintenance Fund paid for it, but that landowner had to reimburse the maintenance fund for the cost of that. So I don't know if that makes it a little clearer, but I can't believe those things happen, but they do happen. Okay, and as I already alluded to or talked about, there is in the chart of accounts a reconstruction fund that can be used to pull out the assessments and project costs for a particular drain construction project or reconstruction project and track those separately. Everything else would stay in the general drain improvement. So the reconstruction fund is going to be more like your maintenance fund in how it works, because you're going to have the subledgers for the individual drains that are under reconstruction and the assessments coming in and the costs going out on that. Okay, there is a provision in Indiana Code 36-9-27-85D that states whenever the certified sum, and that's the certified total assessment that's been collected, is not expended within 2 years after the last payment that has been allowed on the project, the county auditor, with the approval of the Drainage Board, shall transfer the unexpected balance to the Drain Maintenance Fund for that particular drain. If the Drain Maintenance Fund does not exist for that drain, it would then be transferred to the General Drain Improvement Fund. There are specific provisions if this is a drain that affects 2 counties, so if you do have those kind of joint boards, you need to read the statute on that, because there are provisions of how it's split out between the counties. Okay, the bond redemption fund is pretty straightforward. It is authorized under Indiana Code 36-9-27-97, and it is established whenever a bond is issued to finance a construction or reconstruction project. The assessments collected on those projects are then placed in this fund to allow for the payment of the principal and interest on the bond. The assessments are spread out over the life of the bond, and instead of the 5-year, 10 years like on the other projects, because the bonds are different. And again, that is any time that the Drainage Board determines that it's going to take more than 5 years to reasonably repay the cost, they can issue those bonds. The cumulative drain fund is authorized under Indiana Code 36-9-27-99. And it may be established by a resolution of the county council for the maintenance and construction or reconstruction projects. This fund may only be established upon the recommendation of the commissioners. The funding source would be a tax levy rather than assessments. If the county determines that the purpose for which the, so the end of the term, if the county determines that the purpose for which that construction tax levy was established no longer exists, or rescinds the tax levy, then the county may transfer the balance of the fund to the general fund, and that's for all, because it's a cumulative fund. After the cumulative drain fund is established, a hearing must be held before the board undertakes any project to construct or reconstruct or maintain a drain when the total cost of that project is more than $25,000. Okay. So in summary, and I think I've said construction, reconstruction 56 times, the drainage board, utilizing the expert advice of that county surveyor, is to be knowledgeable as to what drains the county has in existence, the status of those drains, and the drain's ability to perform the function for which it was designed. If the board determines additional work is needed, either as maintenance or reconstruction, they must follow the statute in proceeding to get that work done. They must inform the public, especially the landowners affected by those drains, that work needs to be done. The board will complete a cost-benefit analysis, determine if the benefits outweigh the cost. If that is the case, they will proceed with the project. They will also need to determine if any current drains are no longer functioning and should be vacated, and if so, petition determine if any new drains need to be constructed. Once they determine the need for maintenance or for reconstruction, they must determine how to fund that project. A drain or construction and reconstruction project may be financed by tax levy, bond issue, or a commercial loan. If a tax levy is used to finance drain projects, there will be no subsequent assessment for the cost of the project paid by the tax levy. If the board uses bonds, a commercial loan, or advance from the general drain improvement fund, then the board will allocate the cost of the project across the landowners that are affected by this drain into individual assessments. The statute does tell you how to allocate that, but we're not going through that today. Those assessments are then certified to the auditor for collection. The drainage board makes the determination if the interest on the loan is to be part of the total cost of the project and assessed to the landowners. For construction and reconstruction projects, the final cost of the project, including that loan interest, would be determined by the drainage board and allocated to the property owners. Once notified, that landowner may pay the full assessment without any additional interest, or they may defer the assessment to equal payments over 5 years, 10 years for an urban drain, but they will pay an additional 10% interest on the deferred balance after that first year. And I did have a question on that. Do not confuse the interest on the loan with the 10% interest on the deferred payment balance. They are two different things. As an example, if you have you've got a project and it's going to cost $10,000 and you get a loan for $10,000 at 7% interest. So now the total cost of the project, assuming that it was contained in the $10,000, is $10,700. Let's assume you've got 10 landowners that benefit equally. I'm sure that doesn't happen, but benefit equally from this project. So each landowner is then allocated $1,070 to be paid. They choose to pay the $1,070 in the first year, or they choose to defer it over 5 years, assuming an urban drain. So the first year, they have to pay equal payments, total of $214, although they can pay them at each installment in May and November, so they would pay the $107 each time, and they pay no interest in that first year. At that point, they will have paid their $214. They will still owe $856 of that original $1,070. So the next year, they again would pay the $214 plus 10% interest on that $856, which is $85.60, and so on. Anytime during the 5 years, they can pay off what their unpaid balance is, and they only owe the interest up through that year. There's no penalty for that or additional interest that's added to that, but that is the landowner's decision. I don't know if that makes it a little clearer. But in that example, you couldn't charge them $214 plus 10% interest plus 7% interest on the loan. Those are two separate things. The 7% needs to be in that initial cost. So if you have a construction and reconstruction project financed by bonds, which again means that the board's determined it's going to take more than 5 years to reasonably repay that, the auditor spreads the payments over the life of the bond. They may not charge interest on the deferred payments, like you can with the 5 years. Again, even with the bonds, the landowner has the option to pay the full assessment at any time during the life of that bond. So we're getting down to forms. And I hope it's come clear that it's very important that the receipts and the disbursements for a particular drain, reconstruction project, or maintenance project are tracked accurately. It's important that the fund balance for each individual maintenance fund and each individual reconstruction fund be accurate. No fund should be negative. The board should be able to receive current information on the fund balances and all of the drain funds so that they have the necessary information to properly administer the drains for the county. Decisions that the board makes on when funds may be transferred, when maintenance assessment should be increased, decreased, or omitted, if the general drain improvement fund needs to pay costs in advance, if you need to change the tax levy, all of that information is predicated on those balances in those drain funds. So it's very important that they be accurate. I'm going to go over the prescribed forms and how they are to be used. Again, if you have an automated system or alternative system, it should provide the same information that we do in the manual environment. Form 63 is the ditch duplicate. It is used to document the individual assessments for construction and reconstruction and for annual maintenance for each landowner. Indiana Code 36-9-57-85 states, the auditor shall extend assessments for reconstruction upon a book to be known as the ditch duplicate for the full period of payment allowed for all assessments for construction and reconstruction, with interest at 10% per year upon all payments deferred beyond 1 year from the date that the certification is made. It is recommended that the ditch duplicates for construction and reconstruction be tracked separately from the maintenance ditch duplicates. So the ditch duplicate tracks what has been assessed, what has been paid for by each landowner, and within 30 days after receiving this certification for the final cost for the construction or reconstruction from the Drainage Board, the auditor shall deliver a copy of the ditch duplicate to the treasurer. Form 63N is the notice of drainage assessments. It's used to notify the landowner of the total assessment for a construction and reconstruction project and let them know that they can pay the assessment in the first year without interest, or they can defer it for either 5 years or 10 years. But we'll pay interest on the unpaid balance after that first year. That notice is to be mailed within 15 days after the receipt of the ditch duplicate from the auditor, and the Form 63N may be used as a receipt if the payment is made within the first year. The full amount is paid within the first year. The Form 63A is the drainage assessment statement. It's used to provide notice to landowners of the semi-annual assessment due after the first year for the construction and reconstruction projects, and all annual assessments, or all assessments for annual maintenance. It is permitted to add a statement of the total amount owed and the installment currently due to the property tax statement as long as the drainage assessment is distinct from the property taxes. The Form 63A may also be used as a receipt, with the original being returned to the taxpayer and the duplicate copy retained by the treasurer. Form 63B is the register of drainage assessments collected by the county treasurer. It's used to document the drainage assessments collected for each drain. The register must be maintained so that the collection of the assessments for construction and reconstruction are separate from the collections for maintenance, and the principal received is separately tracked from the interest and any penalties paid. The 63C is the subsidiary ledger for the General Drain Improvement Fund, and it also would be for the Construction Reconstruction Fund if you choose to use that. This form is designed to track the detail of receipts, disbursements, and balances for each individual drain or combination of drains with construction or reconstruction assessments. One copy of the form should be used to track the total receipts and disbursements for all construction reconstruction projects, and then there should be an individual sheet for each specific drain or combination of drains. So for example, if you have 10 drains that are under reconstruction projects, you would have one form that lists all the transactions for reconstruction, and then you would have 10 individual ledgers for each specific drain, tracking the transactions specific to that drain. The total of the receipts, disbursements, and fund balances from the 10 sheets would total the amount for the receipts, disbursements, and fund balance on that control sheet if you're using the construction reconstruction fund. It does get a little complicated because the general drain improvement does have other funds that come in, tax levy, transfers from general fund, repayments from maintenance funds that are not specific to a drain. So if you're using your general drain improvement, you would probably need to insert another subledger that tracks those kinds of payments that are just the receipts coming in or disbursements that are going out that are not specific to one of your construction reconstruction drains. So, and do remember that the General Drain Improvement Fund can be used to pay up to $1,500 on drain maintenance if there is not a drain maintenance fund in existence for that particular drain. And so those would also be on that separate subledger for the non-specific charges. So when you're done, the subledgers, including that extra one for the GDI, must reconcile to the control ledger, and then that control sheet should support the General Drain Improvement Fund in your funds ledger. The Form 63M is the subsidiary ledger for drain maintenance funds. These should be kept separate from the construction reconstruction subledgers. Again, this form tracks the detail of receipts and disbursements for each individual drain or combination of drains with a maintenance assessment. Just as with the subsidiary ledgers for the construction reconstruction, there should be a control sheet that contains all of the transactions on the maintenance funds and a subledger for each individual one. So again, if there were 10, there would be a control ledger, and there'd be 10 individual subledgers that add back up to that control ledger. The 10 individual subledgers would each show the work, the assessments collected and the work paid for on that particular drain. And finally, the Form 49DC is the County Treasurer's Certificate of Collections of Drainage Assessments. And this form is used at settlement to inform the auditor what has been collected so that you can post those to your subledgers and to your control ledgers for those for those assessments, those projects that have assessment. The form is completed by the county treasurer at each semi-annual settlement, and then you will quietus into the appropriate fund and spread over the appropriate drains on the subledgers what has been collected for those funds. And I think I'm pretty close. Pretty close. Okay. Are there any questions? Have I put you all to sleep completely, totally? Oh, good. Okay. The land that was affected, yes. Can you sell property that has unpaid drainage assessments? And the property that is affected by the drainage assessment alone can be, so if the person owns, I'm going to make, this is going to sound stupid because I don't know what I'm talking about, but if the person owns 10 acres and only 1 acre is affected by the drain, only 1 acre can be sold. You can't sell all of their property, just that one. And I know there is an issue when that property is improved, and I really don't know. It says any property that is affected by the drain that the assessment has not been paid may be sold, but I know there are issues when it's an improved property, and I will have to check into that because I'm not sure what the answer is on that.
Has anyone created a digitized subsidiary ledger that's been approved by the State Board of Accounts?
We do not approve, we would approve the forms. There are some that use like Excel spreadsheets that are a complete duplicate to what the prescribed forms are, and those don't require approval. I know there is a couple of counties that are working on a software system. We don't approve the system, we just approve what's generated by it, and you'd have to check with, I don't know if somebody is working on it, I know because I've had calls from their software person. Is it your, huh? Huntington County. Check with Huntington County. Since there are no other questions, I really, really appreciate your attention to this. I know this is a dry and not really interesting, but if you're a county with drains, it can probably be a problem. So I will be working on updating the drainage manuals so that it will be more current, probably based on a lot of what I presented today. Hopefully within next year, I will try to get that out. If you have any questions, don't hesitate to call. I have read those 79 pages, I don't know how many times, but I'll dive back into them till we figure out what we need to do in this, or where we need to go for help on this. So don't ever, ever hesitate to call, because that's what I'm here for. And I thank you for your attention, and let me see what we're doing next.